Indicators are vital for trading stocks. They give values to your ideas. You can't just say that you want to buy strong stocks. You have to be able to objectify that with a value. So in today's video, I'm going to give you 3 indicators that cover how to identify trend, how to identify strength, and how to identify reversal potentials. First, let's touch on those reversal potentials. I'm going to hop into my edit studies here, and I'm going to add the Bollinger Band study. But we're going to spice up this study a little bit because this study is just a lot. It's hard to combine with other studies, and it even gets a little distracting when trying to do some of your price action analysis. These Bollinger Band lines all over the place can be a little bit distracting. But just to talk on this study first, the point of it is if you are above this midline, you are in uptrend. If you're below this midline, you're in downtrend. Then your upper and lower bands serve to show you where reversals are possible. Hey, if it's getting below this lower band, it's a little bit stretched to the downside is this ticker. Expect upside soon. If it gets up above the upper band, hey, it's a little stretched to the upside. Expect downside reversal soon. So to clean up this study so that you don't have all of those lines plotting on your chart being very distracting, I have created a custom study that plots this down arrow when the price is breaking above that upper band and plots up arrows when the price is breaking down below the lower band so that we can be more simply focused on the reversal indications of this study, as that's the number one usefulness of it. You will have access to this custom study. There is a share link in the description of this video down below. What you're going to do is you're going to copy that share link and then back within your Thinkorswim, if you click on the setup in the top right, open shared item, paste that URL in, hit preview, hit import. Then from your studies tab, if you look up DTS, that is what all my custom studies are prefixed with. This one is called the DTS Bollinger Break. So you simply add that to your chart, and now you have this custom study plotted. And of course, after importing this one study into your chart, you decide you like this idea and you would like access to the over 60 other custom Thinkorswim coded strategies, studies, of course, scanners, including custom watch list scanners, etc., etc. They are all available for import over on my website, daytradingstrategies.net. Link in the description down below. And another huge upside of having access to these codes is, of course, once you have them imported into your Thinkorswim using the easy process we just talked over, you can click now into this scroll and you get access to the source code of the studies. This is a great way to begin learning how to create your own custom codes in Thinkorswim, getting access to all of the ones that I've already made, seeing how I make them. So once again, link in the description down below. Go sign up today. But of course, with this custom study, since we have turned off that Bollinger Band midline plot, we now need another way to objectify trend. Because you really only want to be looking to buy these dips if the stock is trending upwards, right? You don't really want to be looking to buy these dips on a weak downtrending stock. Those aren't typically the kind of dips you want to be buying. So hop back into studies, edit studies. And what I'm going to do here is I'm going to turn on a simple moving average. And I like to use the 200 length simple moving average. Now, I know this is like one of the most, if not the most popular indicator that anybody uses, but I don't think a lot of people use it in the right way. I don't use this line at all as like an idea of support and resistance. I don't think the price is going to come down and like bounce off of the 200 simple moving average or come up and bounce off of the 200 simple moving average. I don't use this at all as a price level. I just use it once again to simply give value to trend. Hey, I want to buy dips on strong stocks. Great. We all do. That's maybe the most popular strategy of all time. But you can't just say that. What does that actually mean? That's not a trade system, right? You're not going to be able to build any back-tested statistics. You're not going to have any idea if you're actually trading the strategy correctly, whether you won or lost because you did or didn't follow the strategy. You're going to have no idea if it's that subjective. So once again, to give value to this idea of, hey, I only want to be buying dips, which we have now turned on our custom Bollinger Band study to identify when the stock is strong, the stock must also be closing when this dip study is provided above the 200 simple moving average. See, look at how you wouldn't have started buying any of these dips that ended up being pretty weak for a while because you're below the 200 simple moving average. You also would be buying this dip and this dip and this dip, and look at how well those all worked out. Just like these dips, this dip, and this dip all worked pretty well, right? Then, of course, you would stop buying this dip, and this dip, which all didn't work. So a great kind of example here of how useful using the 200 simple moving average to objectively define trend works. Last but not least, we need an indicator to objectify strength of stock. So to kind of continue the story of this sort of pseudo trade system we're building in our heads right now, buying dips on strong stocks, let's say the exit strategy is, well, I want to go ahead and sell the position on the first sign of weakness. Once again, you have to give value to that. You can't just say it or it makes no sense in a trade system. So what we're going to utilize is the RSI indicator. RSI, of course, stands for Relative Strength Index. It is a great way to measure the strength and weakness of a ticker. I'm sure you all know the basic ways to use the RSI. There's thousands of videos and articles about this study. But just so you learn something new in my video, I'm going to teach you how I use RSI and how we will for this trade system that we're building. So I'm going to utilize RSI as my reason to get out. So we bought this dip here as our Bollinger Band study is showing us a dip, and we're closing above the 200 simple moving average. Both of our buy conditions are true. Now, I'm going to sell when the RSI drops 10 points from a local high after entrance. So in this example, we would buy the close of this candle here. Then we would sell the close of this candle here because the RSI value drops from 67, if you can see that little number there, to on this bar, 56. That being an 11-point change, we would sell the close of this candle. Decent little 13-point winner there. Now, if we go ahead and go to the next trade example, let me get these lines off the chart. If we go to the next trade example here, we would end up buying the close of this candle here. Then the RSI up, 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 up. We get a 10-point RSI change, not quite there, from 74 to 69. Here it goes from 71 to 64 to 55. So we would then be selling the close of this candle as from 64 to 50, or sorry, the high was 74 down to 55. Of course, much larger than a 10-point change. That is where we would sell a nice 54-point winner there. So that is how I would use RSI to objectify weakness in a stock for exit in this trade system. Not the value of the RSI at all, but rather the rate of change in the RSI. And just to help showcase to you that all these ideas do in fact work, I went ahead and actually built this strategy within Thinkorswim. First thing I had to do was define a custom RSI so that the RSI value is only calculated once we are in a trade. Else, if you don't do that, the RSI value is always lower than the lowest RSI value since you're already buying a dip. So we had to create this RSI so that we can make sure we are comparing for our sell the RSI after entrance is less than or equal to the highest RSI since entrance out of the last 5 bars, of course, multiplied by 10. And for our buy, of course, we have close greater than the average close over the last 200 bars and close less than the lower band of the Bollinger Bands. If we go ahead and back out of this, I've got the floating P&L study on here, which shows you the P&L of the strategy. I've got my custom coded backtest data study here, which shows us the win percentage, average win, etc. of our strategy. This is available for download on my website, wink, wink. Then, of course, we have the strategy running. So the two examples I went over previously, the buy here, the sell here, the buy here, the sell here, you see properly plotted on your chart. And if we back out, zoom out here a little bit, get an idea of how this strategy is trading. Up on Square, doing well on SPY, looks good on NVIDIA. Now, is this the best strategy of all time? No, it's not the best strategy of all time. The point of this was not to build the best strategy of all time. The point of this was to give you all some ideas on the most valuable indicators that I have found in my 9 years of trading and how you should be making use of these indicators to objectify trend reversals and strength of tickers to help you in your own trading systems. So guys, hit like if you enjoyed this video. Make sure you're subscribed if you're new. Make sure you are looking and making use of that share code in the description. And if you want access to more, of course, check out the website. And go Vols. We're going to beat the crap out of Florida tonight. I'll catch you all in the next one.